So at ARK Invest, we're long-term investors. So any one quarter, shouldn't change our long-term thesis too much. I think what we're excited to hear about on this call, first we'd love to hear an update on the full self-driving program, what kind of progress they think they're making with that. They've said that by the end of 2019 they'll be feature complete, launching commercial service in 2020 for autonomous taxis. Long term, we've looked at Tesla gross margins, which I think are a concern for investors this quarter. And we've actually predicted using Wright's law, which is a law that we use to predict many innovative technologies. We think by the end of 2020 that Tesla should be able to achieve a 30% gross margin on the Model 3.
You guys were selling shares, though, coming into the quarter, is that right?
Yes, I'm actually glad you brought that up. So this was more of a portfolio management thing. So in certain of our funds, the restrictions that our client accounts have mean that we have to sell once it gets to a certain percent. So we're allowed to buy up to 10% of the fund in any one name, and if it appreciates a great amount, then we'll sell off. So Tesla was actually up 30% relative to the other names in the fund, so we took profits.
So it was just an arbitrary kind of portfolio
exactly.
rule-based bit of trimming.
Exactly, it was not a change in conviction.
All right, well, Tesla right now is spiking. It's up 11% in the after-hours trade. We should have all of the details around that report in just a moment. But Tasha, how important is China to the story here?
I think China is very important. Tesla is an exponential growth story, and China hitting is what could sort of tick this off.
Yeah, the revenue, which, sorry to interrupt, Tasha, just want to mention some of these numbers as we wait for Phil to dive into them a little deeper. But the EPS of 78 cents is quite a significant beat in terms of what was expected. Revenue, $6.3 billion. That's essentially in line, down a little bit year over year. And we're looking...
Just look at the EBITDA margin of 13.9%. It was a big jump. Probably was where a lot of the numbers were made in the cash flow margin.
Stock up, as we said, 10.3%. In terms of the deliveries, what are you looking out for on that, Tasha?
Well, we already have the delivery numbers, so we know that those came in slightly below estimates. They were about 97,000 compared to, say, 99. But I think overall, revenue, we expected it to be a bit lower because of the Model 3. And again, those long-term margins are what we care about. So we think that, Tesla said they could achieve a 25% gross margin on these cars. We think it could be higher at 30. So we think this, EVs are really the long-term potential of the auto market. The auto market, sales are down, but electric vehicles are picking up, and Tesla's the leader in that market.
15% decline quarter over quarter in operating expenses. I mean, any sense of whether that was, well more exaggerated than you would expect? I mean, was that something you would have been looking for?
I think that's certainly going to be a surprise for investors. Yeah. I think, it goes to say that Tesla's really focused on these numbers. I think that one thing that I'd like to hear about on the call that's not talked about enough is the autonomous driving business, to go back to that. I don't think any analysts are taking this into account. And we think this is a market that should be worth $2 trillion. It could add thousands of dollars to Tesla's stock price.
Phil LeBeau is back with us and has been diving through some of the numbers. Phil, what jumps out to you?
Well, Wilf, they're still kind of crunching the numbers back in the newsroom. You see this big spike here? That's because the adjusted EPS is $1.86 a share. We should point out that a number of analysts said that they expected a loss of 42 cents a share. So some of our folks who crunch the numbers are trying to reconcile the big difference there between the $1.86 adjusted, while many people were expecting a loss. Revenue, as you mentioned, did come in a tad under expectations at $6.30 billion. The automotive margins, GAAP automotive margins, 22.8%. And a couple of notes here regarding their production. Trial production in China from the plant in Shanghai, that has begun. Remember, they're expecting that to ramp up as we head into the end of the year and have some deliveries in China. And also, the Model Y is ahead of schedule. They are expecting production to begin by the summer of next year.